This is one of the cheapest stocks on the market. Chinese e-commerce company JD.com has a current market value of $44.5 billion, despite doing over $150 billion in annual sales. And JD also has $10 billion of cash and $28 billion of investments on its balance sheet, account for $11 billion of long-term debt, and the total enterprise value is under $18 billion. Considering JD reported over $3 billion of net income last year and almost $6 billion of free cash flow, the stock is valued at under 14 times earnings and only 3 times free cash flow. Such cheap valuation usually only applies to companies in terminal decline, but that doesn't apply to JD. Revenues grew 4% last year and 10% in 2022. Meanwhile, JD management is aggressively returning capital to shareholders. The company declared an annual dividend of 76 cents a share, which represents a yield of 2.7%, and the company plans to buy back $3 billion worth of stock. That would reduce shares outstanding by more than 7%, helping to boost earnings per share. Of course, there are reasons why JD stock is so cheap. The most obvious relate to China, which is experiencing an ongoing property slump, and China's capital rules mean that investors in Chinese ADR shares don't actually own shares of the business. Chinese ADR shares represent a holding company based in the Cayman Islands, which has a contractual right to profits. This raises the risk that the Chinese government could one day cancel that agreement, putting shareholders in a desperate position. Meanwhile, JD's business faces pressures of its own. Competition comes from Alibaba, Douyin and Pinduoduo. While Pinduoduo's revenues have grown 70% over the last 12 months, JD's growth has sunk to only 4%. Slow growth is a problem for JD because it has incredibly slim profit margins. Net income margin over the last 12 months is only 2.2%. There's one other important detail. JD's balance sheet includes a $23 billion liability for accounts payable, which is money for goods that it's already ordered. So taking those bills into consideration, JD's cash position isn't quite as strong as it looks. JD does have potential for huge upside because the valuation here is so depressed. However, the stock also carries a high level of risk. Without further visibility into JD's operations and its popularity in China, I give this stock a neutral rating, but these are my personal opinions, not financial advice, and I've got no position in JD stock. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.